Welcome to the Making Money in Multifamily show, where we discuss everything to do with multifamily real estate investing. We believe it's the best way to gain financial freedom and build lasting wealth. This is where you'll find the best information and practices to help you succeed in your real estate business, whether you're already experienced or just starting out. Here's your host, Dave Morja.
Hello, listener, and welcome to the show. I am your host, Dave Morja, and with me today is Ken Gee. Ken, welcome to the show.
Thanks so much for having me.
Yeah, Ken, just want to give you your background before we dig in for the listener. Ken is the founder of KRI Partners and the KRI Group. He has darn near 25 years of real estate experience, banking, private equity, and investing experience just in general, and that totals over $2 billion in transactions. His background to get into all that is in finance and accounting, and he also has licenses to broker in Ohio and Florida. So yeah, just a lot on the resume, Ken. Do you want to just kind of dig in on your focus and your background?
Sure. So I grew up in Toledo, Ohio, got my undergrad from the University of Toledo, moved to Cleveland, went to work for a bank where I was a commercial lender for 5 years. Well, I went to school at night at Case Western Reserve, got my master's degree. Then I decided, as I was at the bank, all I kept hearing were my clients talking about the fact that they were making a ton of money in real estate, right? They had ongoing businesses, but they were always focused on this real estate piece, right? And I thought, okay. Well, then I went to Deloitte, where I spent 7 years as a CPA. And wouldn't you know it, the Cleveland office at Deloitte had a huge real estate practice. So again, here I am seeing clients just making money hand over fist. I said, you know what, enough of this. I don't know how much you know about CPAs, but they work really hard, really hard. And you're always working for somebody else. And it was in 1997, I decided to go out, or actually in 95, I started to figure it out. And in 1997, we bought our first deal, a small 28 unit building at Shaker Square, which is a part of Cleveland, Ohio. And so that was my first deal. That's how I got started. About 10 or 15 years ago, I decided, I'm fast forwarding a bit here. I decided it's time to go to Florida, right? Cleveland is a good market. It's just tough to make money in a non-growth market. So I said, wow, if we can do this well in a non-growth market, what would happen if we were in a growth market? So it took a long time to get our feet on the ground, establish credibility and all that. But we've been in Florida now for quite some time. We also do third-party management, and we manage just about 2,000 units, somewhere around there, plus or minus 2,000 units, all in central and northern Florida. So, I know that's a very long-winded or very quick, trajectory through the way we grew up, but it's been a lot of fun. And now we just focus primarily in Florida.
No, that's a perfect summation and really just highlights where you are today. We got talking before the show kind of about private placements, and obviously you've done quite a few at this point, and just the volatility that can be kind of just happen with a private placement, just, the essence of the term. It's just a deal that doesn't get a lot of SEC kind of discretion and all these things. And you have to kind of make sure that whichever side of the coin you are on, you're behaving, or making sure everyone on the other side and on your side is behaving. So do you want to just kind of dig in on that as far as, what do you do in this kind of private placement space? How do you behave? We were kind of talking about some programs you're in, and maybe just talk about how you present yourself and how you
Sure.
uphold yourself to a standard these days.
Sure. So what I think is important, so I'm sure everybody probably knows the Jobs Act in 2012 is what kind of created the opportunity for us to have this private capital market, which is really exciting because before it was only you had to know someone, right? You had to be extremely wealthy, and you had to know someone. It was called the country club network, so to speak, right? That's what it was. Well, that law pushed it down and made it possible for many, many more people to get into these real estate deals, because you really, people were making a killing in these deals, but the ordinary man and woman couldn't get into them. So that, number one, I was so excited to see that happen. This private capital market has been growing up over time. And so now it brings with it a whole new perspective. And that is, now we have private investors meeting with private syndicators and fund managers to figure out where to invest their money, right? It's no longer a publicly traded, audited financials, all of that stuff is gone. So if you think about the long-term health of this business and the ability for investors to do really well with sponsors, it's all about experience, track record, and all of those things, right? So one of the things that I focus on is make sure that we're vetted, right? We're super transparent. We use a company called Veravest. It's on the web, veravest.com. And what we did is we paid them a ton of money. They do this for not just us, but lots of people. We had to send them 23 years of tax returns, settlement statements, operating agreements. I mean, you name it. They vetted our entire track record, tick and tied the entire thing, which I think is super critical, because now when we talk to investors, they don't just have to take my word for it that I really did all those deals and that we really did make all that money. Somebody looked and said, oh, you know what? This guy really did it. They also do a full background check, which is really important, right? You know, now that I'm not a criminal, I don't have a felony, blah, blah, blah. All those things are important. And to top it off, then you can choose a service with them, which we do. And that's a monitoring service. So going forward, everything that we have, we send them quarterly, our GL, our bank reconciliations, our bank statements. They have our operating agreements, and they look and see what we're doing and make sure that we're complying with what we told our investors that we would do. Just a massive, massive benefit to the whole industry, I think. So again, I'm not the Veravest poster boy, but I believe so much in that concept that as soon as I heard about them and learned about them, being a CPA myself, I thought this is exactly what this industry needs. So we embrace that fully. It's an expensive proposition. But as I think about, most people get into this business passively, and true passive investment means you give your money to me and then I go make it work. I go make money and then give it back to you. Right. That's truly passive. So you've got to really make sure that the people that you're investing with are well vetted, and what they're showing you on paper is really what they are. At least I think that's critical.
Yeah, a service like that is certainly interesting. It seems to be, like you said, kind of right up your CPA background alley. So I'm glad it's working out well for you, and as it should, right? I mean, if you go into something like that with no skeleton in the closet, then other than the kind of pain of gathering documents and the monetary value, there's no downside to doing that because you want to prove to everyone that you're staying
Right.
above board, right? So that's amazing. Unfortunately, Ken, not everyone could probably say the same. So, to those investors, what do you say to them when they're starting to evaluate who they do business with? Especially because this private placement market, you just can't know everybody. You can't know all these sponsors, and maybe you get a referral and someone did one deal with them and it worked out great, but that was a cake deal and the next one doesn't look so juicy. So how do you kind of walk people through this decision-making process to work with somebody?
Yeah, that's a really good idea, or a really good question. So it's all about experience, right? Think about this. If you just started doing something a couple of years ago, you have a whole learning curve ahead of you, right? I covered this in the book. I wrote a book. We can talk about it later, but multifamily real estate's a total game changer, right? So what everybody starts out trying to figure out how they're going to do this. Should they buy a single? Should they buy a double? Should they invest with somebody else? That's the first step in the process. Um, Secondly, now you got to figure out how to vet people. And so what I do in this book is I talk a lot about let me tell you how the business really works, right? What makes syndicators do what they do, act the way they act. Same thing with fund managers. And I help investors figure out how to vet sponsors. And I focus on a couple of things. This gets to the answer of to your question. Number one is track record. We just talked about that. Number two is experience. That's really, really important. In fact, I would say, well, you obviously have to have a good experience, but the track record the experience is critical. So if you can have an impromptu conversation with a fund manager or syndicator, and you're asking really detailed questions, like what I point out in the book, there's a pretty good chance that if they don't know what they're doing, you're going to start to sense that. You're going to start to sense, I don't know, that doesn't sound like he's really diving in and he really gets it, right? That's your goal, is to figure out whether or not they really know what they're doing. Everybody's going to tell you they have experience. The question is, how much experience do they have? And you have to figure out how to gauge that. The last thing I would say that is really important that I like people to think about is just the terms of the actual offering, right? When you do a syndication, or you do a private placement, or you do a fund, when we start creating these things, we literally have a blank slate. exactly how do we want the terms to look? How do we make sure that our goals align with our investor goals, right? That's really important. You should never be in a deal where it's possible for the sponsor to do really well, but you not, right? That's bad, right? And sometimes, people new in the business, they don't think about it. They just haven't thought that deep into the whole process. So, I do want them to consider that because the terms are all over the map. The fee structures all over the map. And you just want to understand what it looks like. Again, more of what I go into in the book, but it gives you a feel for what it's like in this business. So you can decide, oh, you know what? Yeah, I can't see a scenario where he does well and I don't, right? That's what you're looking for. And if you can find that, then you're golden in this business.
Yeah, it's funny you mentioned deal structuring. I was talking to someone the other day about, and I didn't get the whole lay of the land on the two deals, but they were like, listen, I have the same opportunity in both deals. I can write the same check. What would you do? And I was like, well, first off, I can't do that without seeing the whole thing. So this is just like high level advice.
Sure.
But it looks like the other deal, which was basically a more core plus, a B plus asset, is the
Mm.
way better deal when you're looking at the returns are the same on the C class deal. Like I don't know the deals again, like I can't tell you, but like if you're just
Yeah.
looking like dollar for dollar, apples to apples, like you have a better risk reward here than the other one. So the question you asked to that sponsor who was pitching the same two deals is that why is the return profile the same on two deals where the risk is so different? So it's just funny to see these things in the market where, I mean, immediately after talking to that LP, I was like, that's on my radar now to like look at these guys that like who I have never done business with, but now like I know something about them that I didn't know before. So it's just interesting to see these things kind of hash themselves out in the market. My question to you, Ken, is in your experience, you kind of floated around in the background of real estate. You got interested in it because it was just kind of surrounding you. Did you have any experiences investing passively where you either did really well or got burned, or just some interesting story as to kind of how it shook out when you learned these processes yourself?
Yeah, interesting. I never invested passively. Remember, the true definition of passive is I just hand you my money and you go make money for me, right? I mean, I've invested in the stock market and REITs and mutual funds.
Sure.
Everybody's done that, but I've never actually invested. Well, that's not true. I'm actually limited in one person's deal, which we just got in, but it's just because why not? It looked like a nice deal that I wanted to be in. So I've not been a passive investor, but the CPA in me, everything that we do and every way I think of things, I always try to look at that other side, right? Because as a CPA, the CPA's job is to protect the public. Think about that. That's what we're doing as a CPA. Now, I'm not a CPA anymore. So that mindset after years and years of doing this at Deloitte, you start to think about, wait a minute, how is this going to hurt the person who's investing in this company, so on and so forth. So you come in with that mentality. So that's why I have maybe I have a keen awareness of that. And after you talk to so many investors, some investors are, brand new, right? They're just trying to figure it out. Some investors, I talked recently with a guy, he has been in just about every investment I could ever even imagine. Super, super sharp guy. And all of our investors are, but this guy just knew the market and understood exactly what to ask and exactly where to go. So we have this whole range of people. And I try to listen to each and every person I have a conversation with and make sure that we're aligned, right? That I did, okay, yeah, I see where he's coming from. Because, even though we've been doing this for almost 25 years, we're learning every day. And every investor that I talk to, I learn something from, and hopefully they learn from us. But it helps me continue to focus on what's important to them. And that's the key as a sponsor or syndicator. In the fund or the syndication world, you have to be careful that they don't get this FOMO and mentality, right? Fear of missing out, right? I got to do this deal. I got to do this deal because what happens is they do the wrong deals then, right? So again, as over time, as a potential passive investor, you're going to start to see that. You're going to see it, right? You just will. So I've never done passive investment, but I've always tried to really make sure I understand how investors think and what's interesting to them. And, the reality of our world is it boils down to their family, right? They're investing for their family, their kids, their retirement, their whatever. And as long as you keep that in mind, as a sponsor, I think you're in good shape.
So for your investor base, are you having some level of personal face or phone time with all of them, or is there some type of system that you employ with people you believe are good stewards of your mission in the company? How are you making sure that their goals align with what you're trying to do with the properties you close?
Yeah, really, really good question. So right now, we're of the size that I can still talk to every single investor. And it is important to me that I have a Zoom call with every single person that invests. We have folks that'll send me an email, send me the forms. I'm ready to invest. And I hit the timeout button. I'm like, timeout, guys. No, 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 no. I need to talk to you. I need to understand what you're doing because it is important to me, right? They may not even realize that their time horizon and ours might not match up because even though we write all these documents to send to them to read, I mean, some of that stuff is some really boring reading, right? Nobody reads that stuff. I wish they did. Some people do, but a lot of people don't. And I want to make sure that, if you're looking for a 3 to 5 year hold, that's what this particular fund has. Now I feel better. You understand the risk that you're taking on. Now I feel better. And it's important that we match it up because the last thing I want, I mean, if you get a mismatch of goals or investment objectives or understanding of risk, nobody benefits. Not of course the investor gets hurt, but so does this fund manager and the syndicator, right? Because we don't want to have that mismatch happen either. It's not good for anybody. So yeah, I try to talk to everybody, even if it's a short 5-10 minute conversation. I want to have it with everybody. And hopefully that's I don't think anybody objects to that.
No, I mean, a messy relationship is messy for both sides of the party, right? Like, it's not like it goes clean on one side and, messy on the other.
Yeah,
On the
right.
one end, they potentially lose their money, but on the other side, you're having to deal with someone who didn't have the kind of wherewithal to understand what the plan was. And then you have someone who's upset with you who is kind of a dent on your reputation, which is obviously,
Right.
as a CPA, I'm sure that's the very last thing you want is to have a kind of notch on the score there. So, yeah, it makes a lot of sense for you to keep on the FaceTime. You mentioned you're at the scale right now where it's still feasible. What do you, if you've planned it all, plan to do if your investor base grows more by count to kind of make sure that you're still paying attention to everybody?
Yeah. Well, first of all, I will always pay attention to everybody throughout our company, whether you're on third party management side, investment management side, everybody can reach me. And that's really important because if somebody's stressed, something's not going well, at a property we manage in Jacksonville for a client, right? That resident can get to me. And that's important because that feedback loop is really critical as you're growing a company. First of all, second of all, I have to make sure that I build the foundation so that if and when we do get to the point where we delegate some of that investor relations contact, right? I mean, we have investor relations help now, but every person has to talk to me before I'm going to sign off on the subscription agreement. There will be some point where that is expanded, but not till I have somebody in place that I trust is going to have the same moral compass that I do and have the same belief structure. So, we're going to continue to grow, but what's important is that we grow slowly. This is the conservative CPA nature in me. I want to make sure I have a good foundation under me because I've seen too many times in this business, people grow up very fast. They don't take care of the foundation that supports everything. And it really gets messy because it collapses in on itself. And you just don't want that. So we're going to be slow and deliberate about our growth. We're cool with that. And so we'll make sure that, when that is delegated, that face to face contact before investment is delegated, that it's the right way to do it.
Yeah, and you're kind of leading me to my next question. You're making it easy on me, but it seems like your mission is pretty clear. Your ethics are very, just straight as an arrow. There's no wavering. There's no nothing. You know exactly what you want to get out of this business. How have you found success hiring to replicate that methodology in your business? How did you find the team around you that has the same goals, the same mission as you do?
Yeah, I mean, we just build it very slowly and very carefully, right? Every person that comes in, whether they come in on the management side or the investment side, it takes them time to understand how we do things. We do things a little bit differently in just about every part of our business. And so they, usually there's some level of experience about how to do whatever it is we're hiring them to do, but they don't know how we do it. So what is important is that you do this slowly. That's the key because over time, people kind of get assimilated into that method. So how do we hire people? I mean, just slowly and carefully. And it's no secret right now that it's hard to hire anybody anywhere for anything. So it even makes it more of a challenge. But we just make sure that they understand coming in what we are all about, what we need them to do. We have very solid feedback systems in place because, again, this is all about building that foundation. Because every time somebody comes between me and our customer, our investor, our resident, our vendor, anybody, that's not me anymore. It's them talking. And it's important that they are, I call it, they're drinking our Kool-Aid, so to speak.
Yeah, and that's the internal team, so it seems like it's just a slow cultivation
Mhm.
process. There is, of course, levels of external team members where you're working, if you're on the PM with another operator or as an operator just, venturing on a deal together. So how do you manage those relationships? I'm sure there's some level of being on the same, path and ideology, but people do operate differently and you can't necessarily force someone to do things exactly your way. So how do you navigate those waters?
Yeah. So if you're thinking about property management companies, we manage all our own stuff. So we generally don't have that issue. It's just not what we deal with, but we deal with all different kinds of vendors, and we look for vendors that align with our goals. Right. My message to our vendors is, look, if we call you, you're going to get paid. It's going to be timely. If there's ever a problem, you come right to me and we'll make sure it gets resolved. And in exchange, I just need you to answer the phone. All right. Treat us fairly, answer the phone. So with our vendors, we try to establish long-term relationships because they're no different than me and you. They're people. They need to make a living for their family. It's not always about trying to extract every last, you know, penny out of them. This is about a relationship that's long-term. So that's how we grow these relationships internally and externally. I mean, in my mind, there's really very little difference between the pest control company, the plumbers that we use, the electricians that we use, than the people that we employ, our property managers, right? They're still people. We still have relationships with them. They have the same needs we do. So it doesn't matter how they're classified. In our view, we try to treat them all as stakeholders. Then every person matters in the system. Does that make sense? I don't know if that's answered
No,
your
no,
question.
it definitely does. It's the treating people as people. And one of the points you mentioned, which I wanted to highlight, was kind of, getting every last bit out of them or what have you, which is really more of the penny pinching, penny wise, pound foolish type of thing. What is your experience with that? Whether it's taking over a property that has gone too far with that type of methodology, whether it's you know making sure that you're not doing it. I think sometimes you have to worry about dollars, but you can ruin relationships for for really not a lot of return if you're not being careful. So how do you kind of navigate that?
Yeah, so when we take over a property, we can tell if the property's been managed in that way. What typically happens is they don't just do it with one stakeholder. They usually do it with all the people that are doing things for them. Usually the employees are not very happy. They're very frustrated. Usually vendors, you can tell when a vendor's been mistreated when you call them. You have to you have to hit reset, tell them we're not the old owner, the old management company. We're new. We do things differently. They're going to be skeptical. So you have to prove yourself over time. So, um, it here's the thing about it. People are very short-sighted. They think if they got that plumber to work for $50 instead of 60, they think I did my job. Well, here's the problem. It is extremely easy for that plumber to make up for that $10. He just pads his hours, or guess what? He doesn't answer his phone, right? Think about the labor shortage we're in right now, right? Who do you think you're going to take care of? Are you going to rush right over to the guy that is going to mistreat you, who he's not going to pay you forever? He's probably going to ask you for a discount in order to get paid, or you're going to come to me, to my property, because I'm not going to mistreat you. We have a relationship. The challenge here is in the hidden costs, and that's what people don't understand. I tell our people, here's what's critical. If we aren't looking, will that person still want to do a good job for you? If you're constantly beating on them and mistreating them, I mean, think about that. Do you want to go do a wonderful thing for the person who's just mistreated you forever? No, no chance. Right. So those costs, they're hidden. You think you saved this little bit of money, or you think you did this, you think you did that, but the reality of it is you just destroyed a relationship, and it's costing you in other ways. You just don't quite understand how it's hitting your P&L.
Yeah, and the plumbing example is probably the best one because that's about the last person you don't want to pick up the phone on the weekend when the pipe bursts or whatever, right? So,
Think
um,
about what he's got to do. He's going to come there and deal with some really nasty
yeah.
stuff.
Or, or he'll give I'll be there, the best I can do is 6 hours when really if you were nice to him, it would have been, 30 minutes. So yeah, I think you're completely
Yes,
right.
sir.
It's more of, yeah, kind of scratching your back and I'll scratch yours. And it's not like there's any like weird, payment things going on or anything, but let's just be fair and honest people and do business in a correct way. We go into the job agreeing on certain things. We don't kind of go against that as the job goes through, right? And we're just gonna kind of work
Yeah.
through it as humans and figure it out. So I like to hear those takes because you see, numbers on a spreadsheet, and then once you figure out that those numbers work, you can try to squeeze more out, but at the same time, you could be doing more damage for the long term relationship. So
Yeah.
yeah,
I,
that's
I say
interesting.
find other ways to do that through technology and being more efficient and things like that. That's what we tend to focus on.
Yeah. Is there anyone in that kind of contract or vendor services where you had to, select another party because they kind of didn't fit your vision or anything like that? I'm not saying that that
Yeah.
happens a lot, but I'm sure there's has to be an occurrence with the amount of properties you've covered.
Yeah. There, we have severed some vendor relationships because they just didn't match up, right? They wouldn't take care of our residents. They would track mud all over the apartment, things like that. Yeah, it happens. It happens. I mean, we treat them as relationships and we treat them carefully. And, every vendor, the plumber, he may have one bad plumber, right? So you're not going to destroy the relationship just because one guy showed up and didn't act appropriately. You're going to, call the guy, hey, can we not, have that guy back, blah, blah, blah. Usually what happens is they want that feedback because they don't want the guy doing what he just did because they know, just like I do, it's not good for business.
Their
So
reputation is on the line just as much as yours is. So
right.
Th-
I was they're running a business just like I am, just
yeah.
like you are. Give them a shot. Let them fix it. And they usually they do. But if not, we're prepared to sever those relationships because it's not a healthy relationship, right? If you're not getting what you need.
Yeah, it's such a tough area to decide on what to do because it's in one aspect, are you giving them enough of a chance, like you said? But in the other, are you waiting too long? And are you just drawing this out longer than it needs to? And you should have done it months ago. So I just like to hear people's takes on, where they decide to put the line in the sand. So, yeah.
It is a tough act, a tough balancing act, I will tell you. And as I'm sitting here, I've probably been guilty of letting it go too far sometimes because I want to give people a chance, right? When I end a relationship, I want to know that I've done everything I can to fix it. And if I can't, I can't. That's fine. We'll end it. But at least I've given it a shot. I don't like to be unreasonable with those relationships, and especially if I'm the one ending it.
Yeah. And that helps you sleep at night too, of course, right? If you went to bed knowing that you yourself did everything you could to at least try to make amends, that helps a lot. So that's good.
Agreed.
Getting into, I guess, back more of the team building and where you see everything going, are there certain areas of the business that you're focusing on hiring or growing, basically just based on needs for the company or where you want to be? And explain that if so.
Yeah. So again, our company is basically two different teams: our investment team and our management team. I mean, we're growing on both fronts. So on the property management side, we manage our own stuff as well as properties for others. We need property managers, good maintenance people, leasing people, regional managers. We're hiring in all those positions because we continue to grow. For example, as we record this, I think this month we're taking on 4 different properties, right? All over Central and Northern Florida. I mean, that's pretty hefty growth. You're talking about several hundred units, right? On the investment side, we continue to grow because we continue to raise money. We have to deploy the capital in a meaningful way. So it's just looking at all those deals, right? I mean, to get one deal done, it's at least 100 deals you're underwriting
More
because
north of that to these days.
they just don't make sense. So you got to find a way to, beef up your team and get that. So you know, I would say anybody listening, if you're interested in learning this business and being part of it, I mean, we definitely have room for people. And then there's all marketing side, right? The whole, this world is all about marketing. And being a CPA, a little out of my comfort zone, I'm getting there. We're getting better at it. But that is another area where, we're definitely looking to add people.
Yeah, I think you seem to be at a pretty confident but critical point in the business where you've achieved pretty much exactly what you wanted to so far, but this is maybe like the the second iteration of that where you're going to have to kind of go back to the drawing board and figure out what keeping the core values means for the next iteration. So it was interesting to hear your kind of
Mhm.
takes on that.
Yeah, I
Um,
think we have it in place. I think we have it in place. It's just continuing to let it grow. Yeah.
yeah, yeah, that's awesome. Ken, as long as you're ready, I'd love to just dig into these 5 key questions before we run out of time
Okay.
today.
Go
So
ahead. Shoot.
the first one is, if you could only pick one trait that explains your success, what is that trait and why?
Yeah. It's the trait is being brave enough to get out of my comfort zone, pushing yourself out of your comfort zone on purpose. When you first start doing it, it's really scary and it's really uncomfortable. And it's still uncomfortable. It's a little less uncomfortable because I'm going to get there. I'm going to get there. So it's that pushing yourself out of your comfort zone is probably the number one reason, because I firmly believe that if you look at, the super successful people in the world, there's no difference between me and them. Just they figured out how to put themselves in the next place, so to speak. Does that make
Yeah,
sense?
yeah, hurdling the fear pretty much, got them,
Yeah, there you go. There you go. Well
Yeah,
said. Yep.
yeah. And then, Ken, what is the most uncharacteristic thing you have done in your business, and why did you do it?
Uncharacteristic, for me personally, is marketing.
Either yeah.
So for me, it's been marketing. As a company, we're really slow and deliberate. I don't know that there's uncharacteristic is a fairly strong word. Um, I'm not sure that there's anything that, I would regret as a company doing. Um, I'm at a loss there, but personally, I will tell you that this whole, getting out and marketing and even being on this podcast, for 20 years, I was very comfortable not doing that. And what I've learned now is it is an enormous amount of fun sharing what we've learned over 20 years with people who have only been doing it a year or two, right? Somebody did it for me way back when. And now I feel good that maybe I can help them a little bit on their way, on their journey to doing what we're doing now.
Yeah, it's a fun muscle to flex, and it's unbelievable the amount of content there is out there these days. So to put a little piece back into that ether is fun for me too. So
It is.
yeah.
Yeah. Yeah.
And then can you name a time where you felt like you weren't going to end up successful, and how did you overcome that fear?
Yeah. That's a good question. If you run your own business, I always tell people you need to be prepared for really high highs and really low lows, right? Because you're sitting there at 8 o'clock at night. You just lost a deal. You can't believe you got outbid. You were sure you were going to get it and now you didn't get it. So what do you do, right? What is important is that you figure out, you stop for a minute, realize this is not a failure. Okay, let's learn from this. What happened? Why did it happen? Is there anything I could do to change it? Right? Learn from it. And then, okay, let's move on. Let's take what I've learned and apply it and move forward. So that I'd say that's the number one thing.
Yeah, and then pretty much flip to that one. Can you name a time where something in your business went perfectly, and what did you do to make that a reality?
Yeah. I mean, I always think everything we do, we could probably do better because I'm a pretty critical person. I just do. But what's most rewarding, I mean, it depends on which side of your business we're talking about. Let's focus on the investment side. So it's really fun and really rewarding when you send an investor a check that is way more than he ever thought that he would earn on any investment. And he calls you and he thinks you made a mistake because he thinks you gave him his money back twice.
That's a good one right there.
Right. That is so cool and so fun, so rewarding. So there you go. Yeah, again, could we have maybe I could figure out, okay, I should have done this. We probably would have made more, but at some point you got to stop with that. But yeah, that would say is the best, that would be my best response to that question.
And then we flirted with this one a little bit already, but what have you been focusing on lately to improve yourself or your business, Ken?
Yeah. I always tell people, it's funny when you go to school, I can't wait to get done. This is horrible. I just want to get out in the real world. Right. Well, then when you get out in the real world, you realize, wait a minute, now I really want to learn. So I had this conversation with my daughter recently. Suddenly you're out of school. Now you realize, oh my God, there's so much I don't know. And now you really want to learn it because now you want to be really good at it. So the number one thing that is made a difference for me is just, I'm constantly reading. I'm constantly on YouTube trying to learn things. I'm constantly going to conferences and seminars and and reading. So it's that thirst for new knowledge, because I don't know that you can ever, learn enough. I mean, I've probably forgotten more than I care to admit, but it is, that's the number one thing I would say.
Yeah, and I think once you get that bug, you never stop learning, or you're never going to lose that drive to keep learning. Even if you think you mastered real estate, you might start flirting with a
Oh
different
no.
avenue of real estate, or there's always something that you haven't done yet that someone else is achieving that you're like, I need to be doing that.
Well, yes, but if you're doing real estate, any business is always going to throw plenty of curveballs at you.
Oh
I
yeah,
can't. I'm just looking at the pandemic, the recession.
yeah.
Think about all these things, right? I don't know how you can be bored. I'm not sure.
Yeah, it's certainly funny. Ken, appreciate the time. It was interesting to start the show, and I like these shows where it's fluid and we just kind of go off and find some little tangent. Started with kind of the how you vet a sponsor, really funneled into how you model your business and what morals you put behind it, and basically who you look for internally and externally for partners. So I just want to thank you for the time. And before we sign off, do you just want to kind of let the listener know about the book that you mentioned, how they
Yeah,
can reach you, all these great things? Go ahead and plug
yeah,
that.
absolutely. Thanks. So it's kripartners.com/ebook. It's real easy. kripartners.com/ebook. The name of the book is Multifamily Real Estate. It's a total game changer. I wrote it myself. It's free. Again, it talks about helping everybody figure out how they're going to fit into this real estate world, because there's a bunch of money to be made, and you'd be crazy not to think about getting into it. And then once you decide that you probably should be passive, which most people should, then how do you navigate these sponsors and the syndicators, and how do you find the right fit for yourself? I think those are two valuable things that I can hopefully help people with. So yeah, kripartners.com/ebook.
Thank you once more for your time, Ken. Really appreciate it.
Thanks for having me.
Thank you for listening to the show. I don't take your time and attention for granted and appreciate that you would spend it with me. If you enjoyed this show or any of my previous shows, it would be a huge help if you would rate and review the show on Apple Podcasts or your favorite podcasting service, or even just share the episode with a friend. And if you'd like help from me or would like to talk about real estate investing further, feel free to visit the show notes for more information, or you can visit davidtravis.com.